these are the surpluses and deficits. Now, you have to understand the silver market, like any market, including an overall economy, there is an annual flow in and out. Real economies, fiscal government has a budget surplus or a deficit, mostly deficits these days. But silver does too. Now, silver and gold are interesting, and they're not commodities per se, they're financial assets. And what you see in silver is when you look at total supply, less fabrication demand, you exclude that investment demand, because investment demand does not change the form of silver. If a fabrication demand, someone buys silver and they make it into electronics or solar panels or jewelry or silverware or mirrors or ball bearings or solders. And it's no longer, it's silver in a manufactured, fabricated form. And to get back at that silver, you have to refine it out of that use, if you can, and if it makes economic sense. If you're an investor and you're buying silver in bar form or coin form or medallion form, it's silver and it stays in fungible silver form, right? So you exclude investment demand from fabrication demand because you want to know what the silver bullion market looks like. And you can see here in the 60s, as the U.S. Treasury was extricating itself from using silver to back silver certificates and in circulating coins, investors saw what was coming and they bought a lot of silver, especially 65 to 69. They bought, I believe, hundreds of millions of ounces in silver bullion directly from the Treasury and in silver coins, which they hoarded or in some cases melted down, even though it was illegal. By 1970, they started selling that silver. And the price of silver was starting to rise, and they sold it into 1979. By 1979, we had inflation at 14%. We were moving toward what was then the deepest recession in the international races. We had U.S. hostages in Iran, Soviet troops in Afghanistan, oil prices quadrupled. Investors bought gold and silver and everything else. There are people who will tell you that the hunts drove the price of silver to $50. They're wrong. If the hunts had driven the price of silver to $50, gold wouldn't have gone from $200 to the $850. Copper wouldn't have gone from 65 cents to $1.80. Wheat and oil and everything else wouldn't have risen by multiples. Okay? The hunts saw a wave coming and they rode that wave. And they helped emphasize that wave and make other people aware of it. We saw a peak. We saw from 1979 through 1989, investors being net buyers, adding to their refined inventories of above ground refined silver in bars and coin form. By 1990, they got burnt out. The price of silver had gone from $22 on an average basis in 1980 to about $4 or $5 in 1990. We had a new economic paradigm. The stock market was doing well, et cetera, et cetera, et cetera. And investors sold silver for 15 years, 16 years. They turned into net buyers in 2005, 2006, and they've been net buyers ever since. Now, very worrisome. You can see how, net buying peaked in 2011. It came down. It got really low in 17, 18, 19. It picked up, and now it's really low. It's looking like 1989. And if you remember when I was talking to you about the late 80s and the creation of the World Silver Survey, the silver producers were saying, hey, CPM Group, why is it that the silver price is so low? And the answer was because investors are not buying it and other people are not selling it to investors. And that's what we need now. We need investors buying to drive the price up if you want a higher price. And you need people, credible people, marketing silver credibly with realistic expectations to those investors. You need a confidence in your system that's there. Now, all of this is that annual supply and demand surplus deficit. No, there is no deficit. If you want to market silver poorly to investors, you add investment demand to your fabrication demand. And then all of a sudden, you have a deficit. And you say, oh my God, the silver market's in a deficit. The price should be going $50, $100, God knows where. Right? If you want to know what the silver price is likely to do, really, you do it this way. And that's why, if you remember that chart I showed you at the very beginning with our price buy and sell recommendations, that's why we've gotten it right. Because we do the fundamental data right. If you do this correctly, the price expectations are quite clear. If you do this incorrectly, if you add investment demand sometime, then you get it wrong. So, if investors are buying silver, that's drawing down the stock of silver. No, actually, investors buying silver is the stock of silver. And that's where you get into this thing. This is the current account, the annual supply and demand, surplus and deficit. The other part is the capital account. How much silver is out there in physical silver form, bars and coins. And you'll see that the biggest part of this traditionally has been implied unreported stocks. These are CPM Groups and Andy and Harmon's back when they were working with us. Estimates of how much silver is out there. And the U.S. Treasury actually helped us along with the silver market in coming up with historical figures, which I'll show you in a second. But you can see that coinage has become very important since the creation of the silver eagle and the silver maple leaf and then other silver coins starting in the mid-1980s. And I am very proud to say that we worked with the U.S. Mint and the Royal Canadian Mint and the Perth Mint and the Austrian Mint and other mints in helping to create the silver, gold, and platinum and palladium coins, including the Soviet in the late 1980s. Government inventories are very low. Dealer and industry stocks are relatively low. ETFs have become more important over the last 20 years since they were created in around 2005, 2007. This is the stock of silver that's in silver form. So bars, coins, and medallions. And one of the things that's happened since the 80s is a larger portion of those inventories have become publicly reported. We know how many bullion coins are manufactured because the mints tell us every year, this is how much silver we're using in coins. We know how much silver is in the ETFs because these are publicly traded shares and they have a regulatory obligation as well as a marketing incentive to tell us how much silver they have. So there's been a shift away from unreported inventories, much of which were 5,000 ounce bars. So they're kind of hard and cumbersome to use, or 1,000 ounce bars, 1,000 ounce bars, to coins and ETFs and smaller bars over time. So there's been an increase in transparency. Back in the early 90s when we were creating the World Silver Survey, and we were saying, hey, there might be billions of ounces of silver in bullion form around the world. We had producers saying, do you have to use the word billion? Can't you say thousands of millions of ounces? It sounds less bearish. But no, there are billions of ounces of silver. And if you want to have a credible place in the silver market, you have to be honest and straightforward. Or as Tom said, speak truth to power. Or speak truth to people who don't have power. The Treasury held about 3.3 billion ounces of silver in the early 1940s. They sold down a lot. Well, they lent out a lot during World War II, during the Silver Lend-Lease Act, to help support the economies and financial systems of various allied countries. they used about 100+ million ounces in the Manhattan Project in magnets because it was during World War II, and the scientists asked for copper, and the military and the government said, no, we can't afford to give you that much copper for these magnets because we need it for the war effort. Copper is used in ammunition, in shell casings, and in a variety of other applications. But we have all this silver that we've collected through various silver purchase agreements since the 1870s. Use it. It wasn't that the scientists said, oh, only silver will work here. They say, we need copper. And the government said, well, you can't have copper, but you can have all the silver you need because look at this. Now, after the war, we had electrification, we had air conditioning, we had refrigeration, we had a big burst of silver purchases in silverware as people in the United States and other parts of the world were wealthier. So they were buying silverware sets and silver jewelry and silver decorative objects and things like that. And the U.S. Treasury was sitting there saying, well, we have silver valued at $1 an ounce in our silver certificate program, and we have silver that at $1.29, you can melt the coins and recover the silver profitably. So we have to keep the price below $1 an ounce. And in the 1950s and early 60s, they wound up using billions of ounces in coins, which were then immediately hoarded, as well as selling bullion outright to it. And by 1970, they were down to 139 million ounces, and that was sent to the military strategic stockpile as the residual was there. The Treasury held on to 30 or 40, 50 million ounces maybe back then, just to have it, and they still have it. And then the Defense Department used up its silver later. Put it all together, you get 60 billion ounces of silver that's been mined through time. Most of it, more than half of it, has been lost, or it's out there in jewelry and decorative and religious objects. We know it's out there. People have it. I have it. I have a 10-ounce statue of Ganesh that was given to me by the Bombay Bullion Association. There's a altar in a church in Bolivia that is a ton of silver. It's out there. You know it. It's out there and you see it. If you're a scrap refiner, every year some of this stuff trickles into the market. Not a lot, a very small percentage of the total, but it does come in. Again, then you have to break out the 5.5 billion ounces of silver that's held in silver form, and then another 30 million ounces that seems to have been lost to history. And again, you can see most of the silver had been mined since about 1850 with the advent of modern mechanized mining and corporate mining companies. Mexican mining. What's the real Mexican outlawing open pit mining? AMLO, the president, has said he wants to outlaw open pit mining. It's an issue that has come up in the Mexican government in recent years, and it has been continually shot down. It's an election year. He's looking for support for environmentalist type of people. He's seen sort of as a supporter of big business and corporations. So he thought that this was something there. I think he's very confident that it will not pass Congress and become law. I think that if he thought that this was anything more than a political ploy, he would never have suggested. So it's something to watch, because these things, once you get into politics, they're strange bedfellows and you never know how things are going to shake out. But it's probably unlikely to materialize. How important is byproduct silver? Well, it's 70% of the market of mine production, right? Mine production is about 750 million ounces a year, and 70% of it comes from byproduct gold, copper, lead, and zinc mines. It's low cost because it's a byproduct of something. And depending on how the company values it, it could be very low cost to them, or it could be a higher cost. And its production and output is more responsive to other metals prices than it is to silver. If you look at a correlation between silver prices and silver mine production, copper prices and silver production, there's a higher correlation between copper production historically and silver prices than there is between silver production and silver prices. And again, it's not just byproduct production that's important. You have to remember that secondary recovery that accounts for about a quarter of annual newly refined silver production. This is annual silver production in mines. See that it peaked around 2016 and it's been coming down. That's kind of obscured by the fact that you've had a relatively strong secondary recovery over the last 8 years, so that total annual supply of newly refined silver has been relatively flat since 2015, 2016, even as mine production has fallen. You see government disposals, net trade from transition economies, that's all very small, and it's mostly in the past. The world's not running out of mineable silver. Silver reserves and the reserve base are much higher than they have been in the past, and we have mined much more silver than existed in reserves when we had only 8 billion ounces of reserves. We've mined billions of ounces, like 20, 30 billion ounces since that time, and we have more reserves now. This is the annual reporting period for a lot of silver mining companies. You have seen several mining companies report very sharp increases in their reserves. There's a difference between reserves and resources. Reserves are economically mineable at current or near current prices. Resources are potentially mineable under various price scenarios in the future. And every year you have resources redefined into reserves, especially with the price rising. When the price falls, you'll see reserves decline because they're sub-economic and they become resources until the price rises. So there's plenty of silver out there. And silver mining companies on a cash cost basis are very important. Why do we do this and now look at total cost, all-in sustaining costs? Because the mining industry, and this is just with primary producers, they provide cash cost data. And so you can look at it. And cash cost data is very important because that sort of determines whether or not you're going to keep mining. You have overhead, G&A, exploration, development costs that go into all-in sustaining costs. And that's all very important. But if you get to a situation, as we did in the 1990s, you can sort of see where this comes from, where the average price of silver was very close to the average cash cost. Then the silver mining industry starts cutting back on its production much more severely, because you can cut your G&A, you can cut your administrative costs, you can scale back your exploration and development costs if the price falls, as it did from 2011 to 2015. And you can keep those low as it did as the silver price was flat from 2015 to 2019. But so the cash cost is important, and it's what's available.